When you think of an heaven acid, precious metals, probably gold or silver comes to your mind. It is an investment that people flock to protect themselves from shocks in traditional markets. The debate over whether Bitcoin is following in the footsteps of these assets continues. Bitcoin offers an efficient way to transfer money over the internet and is controlled by the decentralized network with a transparent set of rules, providing an alternative to paper money controlled by a central bank. Much has been said that the price of Bitcoin, and here we decided to study what the price of cryptocurrency might look like if it becomes more widespread. However, it is helpful to say a step first. Bitcoin and other digital currencies have been touted as an alternative to paper money. But what gives Bitcoin a monetary value? Why are cryptocurrencies valuable? A currency can be used if it is a store of value, or in other words, if it is reliably calculated to maintain its relative value over time and without depreciation. In many societies throughout history, commodities or precious metals have been used as legal tender because they were considered to have a relatively stable value. Rather than forcing people to carry large quantities of cocoa beans, gold, or other ancient form of currencies with them, societies eventually turned to minted currencies as an alternative. However, the reason that many examples of minted coins could be used was that they were a reliable store of value, as they were made up from metals with long life and little risk of depreciation. In the modern era, minted coin often take the form of paper currency which does not have the same intrinsic value as coins made from precious metals. It is perhaps even more likely that people are using electronic money and payment methods. Certain type of cryptocurrency rely upon being representative, which means that each coin and note can be directly exchanged for a specific amount of a commodity. However, as countries abandoned the gold standard to ease concerns about federal gold reserves, many of the world currencies are now classified as fiat currencies. Fiat currency is issued by the government and is not backed by any commodities, but rather is based on the conviction of individuals and government that the parties will accept the currency. Today, most of the world's major currencies are fiat currencies. Many governments and corporations have concluded that fiat currency is the strongest and least likely to deteriorate or lose value over time. So, what makes a good store of value? To understand what constitutes a good store of value, let's start by examining what a bad store of value can do. If we want something to last for a long period of time, it gives without saying that it must be durable. Think about food. Apples and bananas have same intrinsic value because people need food to live. But food is scarce. These items are sure to be very valuable, but that doesn't make it a good store of value. They will cost a lot less. If you store them in safe for several years, they obviously decompose. But what about something inheritably valuable yet permanent? Say dry pizza. It's better in the long run, but there is no guarantee that it will have value. Pizza is produced cheaply from readily available sources. Anyone can flood the market with more pizza. So the value of pizza in circulation will decline as the supply increases. Therefore, for something to retain its value, it must also be rare. Some people think that fiat currencies like dollars, euro, yen are good way to store wealth as they retain value over the long term. But these are really bad store of value, as purchasing power sharply as new units are created. You can take your savings and put them under mattress for 20 years, but they won't have the same purchasing power when you eventually decide to spend them. In the year 2000, $100,000 could buy a lot more than today. This is mainly due to inflation, which refers to the increase of prices of goods and services. In many cases, inflation is caused by an excessive supply of paper money due to government's practice of printing more money. It is an illustration. Let's say you buy 25% of the $100 billion supply, which is $25 billion. time passes and the government decide to print, for example, an additional $800 billion to stimulate the economy. Your pie share has suddenly dropped to somewhere around 3%. This is more money in circulation. It goes without saying that your part does not have the same purchasing power as before. As with our pizza discussed earlier, making dollars is not expensive. The above can happen within a few days. With good savings, it will be difficult to flood the market with new units. In other words, the piece of the pie should thin out very slowly, if at all. Taking gold for example, we know that its supply is limited. We also know that working with it is very difficult. So even if the demand of gold suddenly rises, the point is not to turn the printer and create more. As always, he needs to be pulled out from the ground. Despite the influx of demand, supply cannot be significantly increased to meet it. The case of Bitcoin as store of value. Since the early days of Bitcoin, proponents have argued that cryptocurrency is more like a digital gold than just digital currency. In recent years, this narrative has been taken up by many Bitcoin enthusiasts. Bitcoin is known for its wild volatility. It may seem counterintuitive that an asset that can lose 20% of its value in one day is viewed by many as a store of value. But even if it falls, it remains more profitable till to date. As there are only 21 million bitcoins, which means that Bitcoin is as scarce as gold, because after the 21 million Bitcoin, no more Bitcoin can be mined or issued. So that's why Bitcoin can be taken as an alternative store of value. Thank you very much.